And they did say, we're going to get tough on inflation. We're increasing the funds rate by 0.75%. That's the most they've done it in a long time. And just a reminder, that doesn't mean mortgage rates go up with it.
Hey y'all, Katie here with Team Evo AZ at eXp Realty. We are so excited for season 4 of R.E.A.L with Matt and Katie, and we have so much juicy real estate goodness lined up for you for this season. Thank you so much for following us and for listening to our show. Remember, we are based in the Phoenix, Arizona area, so if you're interested in buying a home, selling a home, or you just have general real estate questions, please don't hesitate to reach out to us. We are a valley-wide team. Our handle is at Team Evo AZ on all of your favorite social media platforms. Enjoy the show.
Hey everybody, it's Katie and
Matt.
We are that real estate married couple talking a lot about real estate and a little about life based in the Phoenix area. Please, while you're here on your favorite podcast platform or on YouTube, Facebook, and Instagram, give us a quick like and a follow. Yeah, I mean, I'm getting
You're jumping right to the close, like right off the bat, not even done the introductions, this is good.
But hey, we want the real people to be notified about the real news here in the Phoenix area, because that's what we deliver. And we have been doing that for now 4 seasons.
Oof.
Dang. And as always, once a month, we have the wonderful, the incredible, the very knowledgeable Ryan Gilliam with Waterstone Mortgage. Woo!
Thanks for having me, guys.
Like, the applause.
Happy to be here again.
Welcome.
Awesome.
Well, let's jump right into it. We have a lot to talk about today. There has been a lot of things happening in the market, right? There's a lot of clickbait out there. I'm seeing a lot of titles of articles that don't even pertain to what the article is about. So people, please read things and don't just take the title of the article or, the caption or whatever at that value, because it's a lot of not so real news out there, guys.
Lots.
Absolutely. And speaking of which, I know I usually talk about interest rates. So, I've been getting a lot of our clients asking us, like, where are they going? Are they dropping? Are they increasing? So there's a lot of confusion when you read the headlines out there. So I just want to let everybody know that interest rates, we actually did see a drop since last month. Last month they were pretty much at their highs. They were averaging about a 6%. Right now they're averaging about a 5.5%. So we've seen about a 0.5% drop. Not so bad. To put things into perspective, on a $450,000 purchase price, a 0.5% drop in interest rates, about $100 in monthly payments. So it's significant. One of the main reasons for that is, the Federal Reserve met last month, and they did say, we're going to get tough on inflation. We're increasing the funds rate by 0.75%. That's the most they've done it in a long time. And just a reminder, that doesn't mean mortgage rates go up with it. That's different. The federal funds rate really means, credit cards, car loans, lines of credit, personal loans. And really what the Federal Reserve is saying is they want people to borrow less and spend less for a brief period of time, because there's so much money out there after the pandemic that inflation, that's why we're at record highs that we haven't seen in 40 years now. So that was seen as a positive. We want inflation to go down, and they're getting really serious about battling it. So the fact that they increased it by 0.75%, mortgage rates go down with inflation, and that's why we've seen a drop. And we're hoping to see that continue as inflation gets under control towards the end of the year, and maybe early next year, we'll see rates drop back down.
I think people are definitely looking for that.
Yeah.
Waiting for that.
Yeah. And I think that the timing like you said, when the Fed made their announcement, and then when, bond yields came out, it was like 2 days right before that. And that actually had a giant repercussion on rates, which sent them up. So I think a lot of people were really confused, because they're like, why are mortgage rates, they went up so high because the Fed's saying this. And of course, people draw those two things together, and that's just not the case. It was just that perfect storm.
Yeah, you're exactly right. And I know we talked about pre-show about how with rates still being at high levels, that we're getting a lot of calls where people are just concerned about affordability. A lot of our first-time home buyers, they feel like, hey, I'm maybe just priced out of the market right now. Property values have gone up so much, and rates along with it. What do I do? And when you kind of look at things, like on a $400,000 home last year, Right now, given the appreciation that we've seen, it could be worth maybe about 470 or so. So when you factor in the rates were maybe in the low threes and now in the mid fives, that increase in payment when you factor in both the increase in appreciation and interest rates is maybe about $900. But they came out with household income, and they did show that in the past 12 months, household income has increased 8%. So on a normal, the median income that most Americans are making right now, that's about an increase in about $900, $800 to $900. So even though we've seen an increase, the income has caught up with it, and hopefully it's not going to affect the pocketbook that much.
And let's talk about those buyers real quick. So over the last 2 years, it's been like fight to get a property. I mean, it's been pulling teeth. It's been 20 offers. It's been giving your firstborn child. Like, it's been crazy for them. And what I've been telling a lot of our buyers now that kind of just gave up and decided to sit back and watch the show, now's your time.
Yes.
We have 40% more more inventory here in our market over the last month.
Yeah. Just
40%.
1 month.
Yeah. So let me show you this really quick slide girl. For those of you that are just listening, this is our inventory levels. What this shows here, this chart here shows our inventory levels over the last 2 years. So it's from July 2020 through June of 2022. And if you look here at the right-hand corner, row or column rather, it's really interesting. Look all the way down. Do you see any 2 months of inventory here in the last 2 years? I mean, we maybe get close to it 1 or 2 months, and that's it. We are now at 2.18 months, which still, guys, it's still incredible in terms of what we're used to working with. I mean, Matt and I don't think we've ever seen 2 months inventory in our entire careers.
This low, you mean? Yeah. No, it's definitely low, but I guess it's all, it's what people are used to, and
right.
what we see and how we process things is very, very short term. I think that's everything. And like you're saying, even with the news, our inventory levels are really, really strange because it's like we're returning back to our previous markets pre-COVID.
Which were fine markets.
And we've always seen, an increase, especially coming into our summer months. So we have to really be real with ourselves and say, hey, what's happening here? Are we returning to normal? Is there something negative happening? And I think once you really look at it and you look at all the ingredients and you look at the fact that properties that are priced right, that are in desirable areas, that are in good condition, still will get multiple offers.
That's true.
They still will go at list or above list. So I think there's a lot to be said to who's putting properties on the market, who's buying these properties and such. And I think those ingredients also point to it's delicate, because I think with just the littlest bit of good information that inflation is now being, tackled, and we see light at the end of the tunnel, or, that word recession that's so subjective, is we're also seeing light at the end of the tunnel. Rates drop, all of a sudden it's gonna flick. And I think you're gonna look back at it and you're gonna say, well, as a buyer in this market, oh, it's risky, and you're weighing all these risks. Well, you're probably gonna be like, ugh.
I feel like those are the people that don't know enough, though. They haven't had enough education. They haven't followed trends. They're paying attention to maybe just the headlines. Right now, I feel is a great time for buyers. And I'm advising all of my buyers that I have sellers, that we're making offers on. So they're not necessarily my sellers, but our listings too. They're being a little bit more negotiable now. Maybe they're paying closing costs when buyers, no way would you ever ask for closing costs, in the last 2 years. I mean, you'd be a crazy person to do that.
Not only that, you're not waiving inspections, you're not waiving appraisals, you're not doing all these things that
scary,
that are very risky.
Yeah.
And when you look at this type of risk that people were easily able to digest, that was something we've never seen before, something that most investors wouldn't even do prior to 2020, never mind the general public. They're doing that. So I think when you really look at what risks were being taken and what risks are presenting right now, they're not even close. I think that if you're purchasing a home right now and you're saying, hey, this is going to be my home for a minimum of 5 years, there's no question.
Yep.
You really got to look at the long term of this and what your options are. And especially like when you work with someone like Ryan, he's going to work with you on a refi when those rates do drop. You start to put pencil to paper on looking at what these numbers represent, on what today's payment will be and how much that might cost. And what, even if we saw a 5 or 10% decline, you start putting all that together with the grand scheme of your plan, you're going to quickly realize those numbers are not negative. If anything, it's positive.
Totally agree. And then just the sheer selection. So I have buyers that are not feeling rushed, not feeling like they have to settle. They're able to, they've got, a selection. We go out and we look at 20 houses again, like back in the day, instead of just 3. And then we rush home and we offer on all 3 and, give our whole lives away. It's not like that anymore. And I think it's a lot less stressful for buyers, which is nice because they've really had it rough the last couple of years.
Well, and I think you just said it. Like, I think a lot of people are just not getting the information they want. They're quickly looking at the clickbait lines, the subject lines. That's kind of appeasing where their emotions are, and that's how they're justifying things. Now, when you really look at our average price homes, they're the ones that are building inventory, but when you really look at luxury and such, they're not slowing down right now.
No, luxury's not.
Luxury is not slowing down by any means, and not to say that there's going to be a big difference in people's mindsets, but there is. And at the end of the day, a lot of people that are purchasing luxury homes and homes north of 800,000, 750, there's going to be a lot less emotion in that decision process, because, a lot of these people that are set up financially to do that, it's not that they had an inheritance. No, most of them have really put a lot of work into their lives in getting this money and thinking of things logically. If all of a sudden we started seeing that inventory on the luxury side was spiking and all, then we'd really look back to what we might have seen back in like 2007 and 8 and saying, oh, what's really happening here?
Right.
Not the case.
Not the case. So as you guys both know, every week I do a blog for Arizona Foothills magazine, and they are one of the most highly trafficked media websites here in the Valley. And, it's about luxury and bougie things. Right. And every week, I supply them with the top 10 most expensive sales in the Valley. And I mean, we're hitting 9 million, 20 million, like these big numbers still. And it's been years that we have been seeing these numbers in luxury. Whereas before, before things went crazy, maybe we would have one big one,
a 3, a 5.
Yeah. And everything else would be like onesie, twosies, or 900.
Yeah.
So 100%. And I think that's something to watch.
Yeah. And Ryan, have you noticed, like, as far as people that are like inquiring on rates, or at least kind of putting their toes in the waters more now than before? Let's say like 2 months ago, when rates were really high, when, there wasn't really any light at the end of the tunnel, when this big ship was kind of slamming its brakes on and everyone was panicking and crying 2008. I feel like, are you seeing more people that are kind of exploring options for the near future?
We do. We've seen it pick up. I think when rates are just kind of skyrocketing, you wonder when it's going to end. And the fact that we kind of hit a ceiling and bounced off a little bit, and we see a light at the end of the tunnel, I think there's more optimism. And like you said, Katie, we're educating a lot of clients the same way. It's a great time for buyers to get in the market now, because things have shifted. They were beat up for the past 2 years because sellers had all the power, and they were getting outbid. And so now that things have shifted, a kind of a common phrase that you're hearing a lot now is marry the house, but date the rate. Where, hey, now's a great time.
Pretty good.
To
I
get
like
into
that.
a home, but you're not stuck with that interest rate. Rates will get better. So take advantage of the good market that we have now, where some people are nervous to get in because rates are higher. But take advantage of where the property values are, the inventory is now, and then a year from now, when rates do drop, you can always get into a better deal.
Totally. And sellers, don't get discouraged. 2.18 months in inventory, we're still in a seller's market.
Yep.
I
it
mean,
still is. Yeah.
I have some sellers that we have that conversation, and, I fill them in on what's really going on. And they come to me rather discouraged because of everything that they're hearing out there in the media. And, something that I think we might've touched on in the last podcast, the last market update, but something that Matt and I have noticed, being in the business for a couple of decades, like we have, you notice that seasonal sort of cyclical vibe, right? Like, in the spring, it tends to get a lot busier. July is crickets. It's hot.
August,
everybody's gone. They're on vacation. They're prepping for school, whatever it is. They're not really focused on real estate regularly. And we're starting to see those seasonal things come back. Like Mother's Day was totally dead, which is usually totally, Father's Day is not, which is funny. But Mother's Day is totally dead every year of my career. Mother's Day has always been, no real estate happens on that day. Well, 2020 and 2021, it was crazy. On Mother's Day. And now we're starting to get back to normal.
Absolutely. And not to kind of beat a dead horse here, but where you were saying, Ryan, that like the average income for American families has now been documented to rise. And I think that, what we've seen and what, everyone's been saying, inflation's inevitable. It's coming. You don't even have to be a statistician or an economist to know that if you inject $3.2 trillion into a world's economy, there's going to be inflation. And I think that's exactly where we're at now. And people are seeing that, where that new baseline of life has just been pushed up, where a lot of people are still thinking in yesterday's mortgage rates, yesterday's cost of living and all that, but they're not really thinking about that new baseline. And when I look at one of the biggest indicators that I'm always talking about on this podcast is rent. Now, you look at exactly what's happened with rents over the last 90 days. That number right there has indicated that people have understood that this is the new baseline. When rates went up, all of a sudden they jumped up that they were higher than what you could, let's say, rent a home that's 2,200 square foot versus buy a home at 6%. People are like, oh, I could rent cheaper, I'll go rent. Well, guess what? Now all those rentals disappeared. Everyone figured it out. And those rents now are just as much as a 6% interest because there's no supply. So people are now used to that. And now they're starting to realize, oh, I can't really beat it. And you shouldn't try to beat it, especially if you're trying to do something longer than 5 years. And they're going to buy. And it's just, and I just hope people don't wait too long, because all the indicators are there. This isn't slowing down.
Right. I agree. And those renters that decided that renting was cheaper a couple of years ago or whatever, had they gotten into the market and bought a house, boy, they'd be pretty happy right now, wouldn't they? It's just like a free savings bank.
Well, and they're not getting those scary letters from your rent
or getting kicked out.
That's saying, hey, we're upping your rent $500. And that's what's happening a lot. There's a lot of people over this last year that a lot of landlords, and this is one of the most beautiful things that we've seen here in the state too. A lot of landlords really worked with their tenants. I know a lot of people.
That's true.
In the news, and everyone really wants to scream that landlords are evil. They're the ones that really kind of make things difficult, and they don't have feelings. It's not the case.
Maybe in some cases.
And I think exactly, just like everything, it's amplified. But a lot of people really worked with their tenants. Now that we're coming out of this whole COVID thing, and we've recovered. And now the investors are looking at it and saying, wait, I can only be philanthropic to a certain point. Like, I'm either giving you money as my tenant, or I'm taking money from my children in my retirement or whatever I have going on. Most investors aren't these super rich, wealthy corporations.
Right.
They're people that are making a living.
Yeah.
And so now they realize, oh my gosh, hey, we gave you a break for the last 2 years. If you look back, I could have charged you $300-$400 more a month each year. I mean, each year that we did this. So you're looking at almost $7,000 that I've saved you in these last 2 years. It's time. I need to raise rent to something that's almost normal. And that's even a discount, but that's a $500 raise. They get pissed. They say that. but most of the time it's really not that case. And
oftentimes they'll go and they'll say, well, we're going to go somewhere else and find another rental. And then they come back.
yeah, and because they quickly realize that
They can't find it.
yeah.
Yeah.
And so, and I think that's where we even said emotion is a driving factor in a lot of this. And I think emotions are, you know, I mean, you're making that because you're being reactive versus proactive, and that's where emotions shine. And if you're deciding to buy a home right now and you write down all the reasons you're buying it, if the emotional reasons outweigh the logical reasons, I would tell you don't buy a home. It's time to pump the brakes and really look at what's really happening here. But I think most people, when they actually pencil it out, they're going to realize the logical side heavily outweighs the emotional side that's actually preventing them from entering the market.
Especially if you're going to hang around. I mean, especially if you're like, hey, you know what? I'm going to live there for 10 years.
Oh,
No brainer
No.
at that point.
No.
No brainer.
no. So bottom line is, and even going in on our basic Arizona economy, when I'm looking at news, no one's really backing off. You know, the Taiwanese chip manufacturer, their bank has now moved here. They've just literally made that they're moving the bank. They have a big banking system coming in, and so it's happening. You know, Lucid just signed a whole other agreement in Casa Grande for 1,300 additional acres.
Dang.
There's all these things that are happening at all corners of our valley that are really saying, hey, these smart people that are running these giant corporations that aren't just regular industry. This is technologically, you know, at the cusp of everything. They're planting their seeds here and they're doubling down. And I think a lot of people need to look at that and say, whoa, okay.
Agreed. I've been telling my buyers that work from home, don't necessarily need to commute or, you know, have those kind of flexible situations to look at Casa Grande. I was just there over the weekend and I haven't driven through in, I don't know, a little bit. And I couldn't believe how much growth there is down there. Like it is. And it's right on the freeway and, you know, fairly convenient if you have to get up to the valley or shoot, even down to Tucson. I think it's great. I think it's a great opportunity for people that maybe have been priced out of the East Valley or, you know,
yes,
to look at.
Absolutely. Absolutely. No, I 100% agree. And I do believe that corridor between here and Casa Grande along the I-10, you look at what Intel is doing on one side and you just start think about the level of experience you're going to have in a workforce, that the technical backing that they have. It's only going to be an incentive for other companies to move in and say, hey, this is where we want to go. This is where our employees are going to be. This is where the infrastructure is going to be. I think things are really going to blow up in that wing of the valley.
And it already is.
Yeah.
Just point to the strong job growth, which helps the housing market, because Katie, I know you mentioned like in that slide that you posted that the inventory levels that we're at was basically we're going back to pre-pandemic levels. And what's interesting is I was reading statistics on what people are expecting appreciation to be, home value appreciation. And they are expecting next year to be about 4%, the year after to be about 3.25%, and then 2025 to be about 4% again, which if you look historically, that's a healthy appreciation. That's a healthy market.
Right.
So, you know, I think people are still nervous that we might be seeing, you know, prices drop, but you know, with still historically low inventory and demand going up, but it's hard to see that happening.
Again, with the clickbait though, prices are dropping, or is it sellers that could basically write their own ticket, can't write their own ticket anymore. And so you're seeing reduced prices because they're not getting the $50,000 inflated price anymore with people banging down their door. Like we got to work for it now as a seller a little bit, you know?
Exactly.
And I think that just once again also supports anyone that's trying to, you know, has a minimum of a 5-year plan. You start to look at that and say, wow, like that's, you know, even if people are being very conservative with their approach to these numbers of 3, 3, 4, you know, you start looking at that. And then the other thing is you look at what our prices are. What is that 3% of? You know, most of the people that are thinking, you know, 3 years ago, the average home was $250,000 to $300,000. Now it's $500,000 to $600,000. You start taking 3%, 4% on that number and start looking at it. that's the ingredients are there. And it's so much to the point that when you even look at what it costs to sell a home and the percentages, it almost says, hey, if I don't really like where I'm at in 4 years, I still had enough to
Still on top.
I'm still on top. I still have enough to exit, not probably make some money, call it my own, get the tax benefit, not have to worry about being hamstrung by landlords, and
It's
so
on your
on.
own
Maybe it
time.
will turn into a rental. There's a lot of things that I do believe point that if you're looking to buy and this is going to be your home, you should be really looking at some tangible things, not just clickbait and the emotions you want.
Totally agree. Anything else you'd like to add, Ryan?
Oh man, ended on that. It was a mic drop for for Matt over here. Good job, guys.
Totally. Great show today, guys. Thank you so much. If you are interested in being a guest on the show, please follow us at Team EvoAZ. That is our handle. We are on Facebook. We are on YouTube. We are on Instagram. Give us a like and a follow. Shoot us a message. Let us know why you'd like to be on the show. And while you're there, please rate us, subscribe, download our episodes, because that really helps us organically get the real news out to the real people. This is not clickbait, guys. This is the real stuff.
Thank you so much.
Bye, Ryan.
Bye, Ryan. Bye, everyone. Bye.
Bye, everyone.